some interesting times, and I'm sure more and more of you are trading options. It seems to be, I think, more and more people putting more capital to work, less defined outlay of cash, and or at least you have a better defined risk. One thing that I always found tough to do was to time a market to the exact dollar and say, for example, as we come into tomorrow's quadruple witching, or what we call the quarterly option expiration, it's very difficult, in the last final minutes to say, hey, where's this market going to pin against what strike? Generally, we have a few techniques we can handicap or guess, and that would be heavily volume traded strikes near an area. But when we take a look at a lot of different markets, it seems to be a little bit harder lately to handicap where a market's going to be in 5 days, 10 days, 30 days. But with the right tools, we are able to look at some very interesting moves and take advantage of them. One thing that I've always been is more of a directional trader. Many of you know that, and I know that first and foremost, we have a lot of current clients in-house, a lot of friends in-house. Good to see Sonia here. Cameron, welcome. A lot of our clients that are in our room. Jeffrey Scott, good to see you back from Italy. John Bullock, of course, good to see you. Julianne, I just go through the list and I see all kinds of familiar names, and it's great to have you guys come back and visit. One thing I would like to say is that this particular year has given us a wealth of trading opportunities and I think for some people the feedback has been it's been kind of a tough environment. Today was a very interesting delay of game reaction, I like to call it. The way the market opened up, traded higher, and then shot up late in the day, and then came off those highs a bit. Several tools that we like to utilize looking at the overall stock market has been very helpful this year. And my personal take is that I think we're at the top end of a trading range. While we might go a little bit higher, there are certain tools that we look for. Every Monday, I do what's called planning and scanning in our trading community. And I'm going to go through a couple tools that we look at. I'm going to share tonight with you a few seasonal ideas that looking at the volatility index, the VIX, and the volatility index, the VIX-in on the NASDAQ, I think might shed some light on what we can expect heading into the summer months. Also, some techniques that we've utilized in the trading room both last week, even yesterday. In fact, one of the trades that we put out for today, stepping in, as I was saying, in the trading room, and I know we have several of our clients here, and I'm going to revisit the analysis that we did in the trade setup in the XLU, the utility index, which was about a 2%, 2.5% move today. No one really trades utilities if there's any veterans in the house. Utilities are probably one of the most safest low beta stocks segment of the market that you could possibly look at. But this year we've had some interesting moves as the index itself. And looking at a move, gosh, folks, it's like a common thing nowadays. And for an option trader, utilizing a directional strategy with the right deltas and with, of course, the right time expiration can be very instrumental in our trading, especially having some of the nuances of trade setups in knowing what to expect out of the trade. Now, many of you have taken either a seminar, you've seen my stuff before, you guys know what the high close doji is, for example. That's a great trading system in itself because it gives us the exact entry point, it gives us the exact location of where to place a stop, and it gives us almost the exact amount of time that we should expect to see for a positive trade result. So it really gives us a timing element, an entry level, a risk element that defines where we're wrong and to cut the loss. And that's what we need in trading. So with that said, what option strategies should we be applying? Well, I've always been under the impression that I've always looked to find I know a lot of still in this day, I think a lot of people say professionals like to sell and write premium, and I believe that that's not necessarily true. In fact, you see a lot of traders. You may want to take note of this. It's very important that we've been noticing for the last several expirations, last couple years now. We've been noticing several of the mid-30 deltas being utilized heavy volume. You may have heard the term the unusual volume activity. Well, I don't go around looking for unusual volume activity. It's quite the opposite. I actually look for defined trading opportunities based on my technical analysis tools, scans, i.e. Many of you are thinkorswim clients and you know how to use the PPS scan feature. In fact, we do have, just to show you, you can go over here to scan, and you can go over on where it says license studies, go down to PPS buy signal, PPS sell signal. Those give us actual defined buy and sell signals, and we can run scans to find out, well, just for right now, how many optionable stocks generated a buy signal today. And we can go down and find out, gee, out of, I've got, just show me a maximum of 500. We had 288 stocks today generated official PPS buy signals. One pops up in my face right here because it's in the A's. As you can see, AEP, which is interesting because it is, of course, the electric utilities in the utility sector. And, of course, it's just not even going past the B's. We could see that we had a random mix of buy signals set up today from biotechnology, software, mining, metals and mining. So I got Barrick ABX over here we see. We've got an airline stock over there. We've got media, biotech, capital markets, pharmaceuticals. So we could actually see where the money flow was going into today. And it's kind of obvious that when we look at overall market action, the biotech sector, the IBB being up the most out of most sectors, you can see where just going through some of the names were only in the B's, and we could see exactly where the buying interest came and generated PPS buy signals. So part of my analytic process is by the use of running scans in the marketplace. So with that said, I always like to find direction. Then I like to look to apply a strategy. Depending on my outlook, whether I'm bullish, bearish, or bullish neutral, or bearish neutral, meaning I think the market can move, but maybe not that much. Or I think the market can move, and it'll move within X period days. Well, how do I come up with that conclusion? I think first and foremost, many of you know about the high closed doji, right? So with that said, it's very important to remember that when we're looking for a trade opportunity, what is the nature of the setup? That's important. Is this a setup that might take months to develop? Is this a setup that should see immediate reaction out of the market? Was there good volume behind the setup? Those are three considerations that we put into, by what I mean, find direction and then apply strategy. That's the decision-making process that I find that is easy to teach and still to this day something that we use on a daily basis. Now, directional option strategies, some of the top directional strategies that I like to apply depending on market condition actually help me in the old days when I first started to trade options back in 1984. When they were first introduced, it was late 84 when they were first introduced to the Treasury bond futures. That's where using futures, man, you needed to really be dead right on the market really fast, right? Because of the leverage and the power. All right, testing. 1, 2, 3, testing. We lost volume sound. Do we have sound? A double Y will be great. All right, yay. Okay, all right. So the long and the short of it is using the market's money to finance your own trades. What do I mean by that? Well, there were several different strategies. Vertical spreads, many of you have been probably through the ringer of option education and know about vertical spreads in the sense that, they cost less money and you can participate in the market. But one thing that you found out that is kind of tough is that you get a market, it goes up, you get in the spread, it goes up, and then the market comes right back down. And the market may have made a 3 or a 5% move, right? You get a 3 to 5% move. That seems to be what we've been seeing a lot of in the market over the course of a few days. In example of the utility sector, we were up in just less than 8 trading hours, approximately 2.5%. A 2.5% move in the market should enable anyone to make a little bit of money in that trade. And if you do, the first thing you do is you got to take some money off the table. You get out of the trade. The moral of the story is that when we're using the market's money to finance our trade, then we cannot be doing vertical spreads as much and looking to get immediate profit. Just remember, there's a little situation that the higher the risk, the higher the return. The lower the risk, the lower the return. So vertical spreads, while they are good as far as a directional strategy, they don't pay you immediately at number one. Number two, it requires a little bit of time and a trend to develop. You have to develop a trend. And vertical spreads pay the maximum at what? Either a huge move immediately, or they have to be deep in the money at expiration. And generally, most people don't ride these into expiration. The third and last strategy, I'm not sure a lot of people are utilizing right now, because this market is getting a little long in the tooth, the overall stock market. I mean, there are some bright spots and still some amazing breakout moves. Just take a look at Ambarella. Today, this thing continued to become a major cash cow. Ambarella is a semiconductor stock, and the symbol is AMBA. And it's just absolutely gone parabolic, defying gravity. Then, on the other side of the coin, of I wouldn't say parabolic, but one that keeps on moving, but it's moving the opposite direction, is Green Mountain Coffee Roasters, GMCR, Green Mountain Coffee Roasters. It's kind of done the exact opposite. In fact, it really didn't anticipate, and I'll just share with you those two charts right now. This is, not going to get into GoPro with you, but let's take a look at, I'll share with you what I define as parabolic. This is Ambarella, and that's kind of a parabolic. And the volume action really started to actually pick up over the last couple days. Since this is counter and has led its sector, I mean, there's very few stocks in the semi-sector, and you can take a look at the SMH as a guide. This is the semiconductor ETF. In fact, its trend is actually neutral to down, and this individual stock has just blistered to the upside. Meanwhile, when you take a look at consumer discretionary stocks, let's take a look at the sector itself, and it's called the, many of you are familiar with the XLY, consumer discretionary sector. XLY, sideways action, sideways, and just the last 2 days, it has seen a breakout to the upside. I'm not going to get into the point that the market's volume is not stellar. I just wanted to bring up the chart pattern of the consumer discretionary sector. Now, this stock, Green Mountain Coffee Roasters, kind of the opposite of Ambarella. It continues to just go straight down. Now, it's funny because this is a company that's used pretty frequently. If you drink coffee in the morning, odds favor the fact that you may have a K-cup in a machine that delivers that coffee for you. Needless to say, it's a stock that just has not performed at all and has gone counter move to not only its sector, the consumer discretionary sector, but has gone counter to the overall stock market. So like I say, this has been kind of for some, a tricky market, but needless to say, when do we use specific strategies? Now, when we're really bullish the market, and that's why we have these scans in place to pick up those buy signals, but we have also the high close, low close doji. We just came off doing a seminar in Las Vegas and really went through some of the essence of the person indicators, meaning the pivot point moving average using the person's pivots, which is available on TradeStation, Trade Navigator, as well as Thinkorswim. And we went through the high and low close doji and a few other things, but we also went through how to define certain strategies and when do we use those. Seeing as I'm more of a directional trader, I really have always struggled, truthfully, doing condors. I really struggled with doing butterfly strategies because I believe I can scan, and that's what I probably focus in on. I focus in on and scan for setups that I think the markets are going to have immediate reactions and big money movers. In fact, just a week and a half ago now, it's working on 2 weeks, we identified, this might be hard to see, where in the heck did we come up with almost a 3% reversal to the day and enacted. In fact, we actually tweeted her account, which you can find at personsplanet.com, a reversal. And in fact, this trade setup came by utilizing a tool, several different tools, volume tools, seasonality, and one that is least used by the masses or probably mostly misunderstood is the commitment of traders data. And that really was one we thought that we would see a move that would take an upside target of around the 79.20 level. We thought it would take a move from around 77 to 79, exactly 20 was our target, written down in our trading room, done as a trade in front of everybody in the room, that we thought the market would take maybe 3 weeks to get there. It happened in less than 3 days. So coming up with the right strategy was just a directional, slightly in the money or slightly out of the money at the time option, which turned intrinsic in a very short period of time. This is actually looking, when we're trading certain markets, one of the techniques I like to utilize is that if we're using an ETF or you're using this is in the Japanese yen, by the way. We were looking at the FXY, is the exchange traded fund in the Japanese yen. But we had noted that the small speculators had an incredibly large net short position, and we're coming close to the seasonal time frame when the Japanese yen actually rallies going into the end of the second quarter. Hedge funds were heavily short this market as well. But one of the interesting things is typically when hedge funds are short a product or long a product going into the end of a quarter, you might see a profit-taking short-term counter-trend trade, meaning they get out of their trades real quick, book the profit, maybe they get back in. And what can happen is you get very sharp, short, fast moves that you can profit from. So instead of having a huge outlay of capital, this is one where we chose to put down to reduce risk, capitalize on leverage. And that's the key. Defining your risk and capitalize your leverage. Not by doing a vertical spread, but an outright long call. This is an environment, folks, that doing vertical spreads is not as conducive, and there's certain times that I do a debit vertical spread. It's when I'm not quite sure the timing element is immediate, and I want to scale into a position over time, and I can trade around that vertical spread. When I'm looking for a directional play immediately, I go with specific long calls. Now, if I'm looking for a large move over time, and the key word is defined over time, John. If I think the move might take more than 30 days, I lower my deltas. Instead of going with a upper 50, 60, 70 delta, I might drop it in 60 days to maybe a mid 30 delta. Now, many of you are options traders, and you know exactly what I said. If you're not an options trader, you need to understand the terms that I've just mentioned. What is the difference between a high delta and a low delta? Well, quite frankly, it's real easy. If you're not really brushed up and on options, anytime someone says they're looking at a delta above 50 delta means it's at the money. Real simple stuff. If it's a lower delta, then you know it's out of the money. A really low delta, like under 20, is deep out of the money. So a high delta near 1, which generally is hard, it's extremely, a delta of 80, 90 is deep in the money, and a delta, of course, of 20 would be deep out of the money. So really all you have to, just for quick terminology, understand that a 50 delta is at the money. So if you're really looking for a sharp upturn, I'm not looking to buy a lot of time, so I don't need a longer term option. And if I don't need a longer term option and I don't want to have a lot of money on the table, then I'll use a mid-range delta like a 50 or 60, which means I'm going with near the money or slightly in the money call option, and I'm looking to participate in a short-term upside move. So that just gives you the quick definition. When we're looking at a higher priced valued product in the 70s, or something, just say right around 50 and up, $50 to $100 range, these are areas that you're going to anticipate to see a pricey premium. And so generally speaking, we don't look at a lot of options in the $2 stock category. But when you're looking at range, or $100 per range, which at the current stock market valuation, it's really hard pressed to find stocks in the S&P 500 under a $30 range. So most of the products that we're trading right now are between 50 and 100. Most of the stocks in the S&P 500, and some are, of course, like Apple over 100. Some of them, like Priceline, are ridiculously priced as price lines in the $1,170 category. So anyway, what we're looking for is what you see on your screen. We are also looking at a situation that developed using technical tools. A volume indicator, number 1, person's pivots, number 2. So this is, as you can see here, using the Japanese yen futures, we're looking at a potential, knowing that the small speculators heavily net short, we're trading near a nice little trade to the upside going direction. So this is something that we did in the trading room just yesterday, and note it's a very similar situation. 3 combinations occurred. Number 1, as I was defining earlier, seasonally buying utility stocks as a defensive play during this time of year, we have a tendency to see utility stocks move up. Now, it was kind of, a low-risk situation as the market was forming what we would call a bullish convergence. The market made newer lows, but not with follow-through volume. In fact, the exact setup in the room that we did was looking as the market broke out because we weren't there fast enough the prior day to pick up the actual low. But over time, what we identified was, hey man, this market really blasted off, and we should see a pullback to the moving average, which would have been around 42.77. And we were noting that the volume started to pick up in an accumulation on this move. So what the theory or the thought process was, if the market's going to be any good, we should pull back to near that moving average, and our stop should be, we were placing stop below 42.44 with the alternative trade of doing a mid-delta trade, near the money trade. So most people would know exactly what we were talking about. So with that said, you can now increase your contract size. You can increase your contract size depending on if the market sees a bigger move. One of the things that I think is really impressive is understanding about directional trading. Many option educators in the past have taught people, oh, you need to sell premium. You need to sell premium because most options expire worthless. And I've all
Is the sound? How's the sound? Do we have sound? Sound in, sound out. We're back. I'm not sure what the problem is with the sound tonight, but thank you all for bearing with me on this one. This is kind of an interesting situation because I wanted to bring this down, and for those that might not be able to trade intraday, right? That's why we run scans for end of day, and that's why we look for setups. And with computers nowadays, it's really amazing if you understand the nature and the fundamentals of options, if you understand the fundamentals of a stock or a futures market, the valuation, then you really shouldn't be afraid of trading any product. And you can run scans and place entries on pullbacks. The problem is, if you're trading an option, you kind of got to be there for when the market, you can kind of put in a theoretical buy or where the option should pull back, so you can kind of figure out, well, if this market pulls back, then this is where I'll place my entry. So don't get too stuck up on getting the precise order. There are many times, even we have an advisory service, which I'm very proud to talk about, PA Stock Alerts. This year alone, while we haven't been as active in the last week and a half, we've been more in a cash position as we get a little clarity with the market. We're up close to, on a cumulative basis, over 56% year to date. Now, that's not bad. I'll repeat, a cumulative basis. And the results of every single trade, I'm not cherry picking here, the results of every single trade, our entry, our exits, our price, not just for this year, but last year, the year before, are posted on the website at personsplanet.com under the newsletter tab. This is a very straightforward advisory service using the techniques. We just don't apply to stock only, not an option. But my point is that if you have an idea of the expected move should happen within the next 3 to 5 days, 3 to 5 weeks, you can then formulate a game plan of what type of an option strategy, or if you want to be just an outright long call position, then you know that what your outlay of capital could be if you're going with a 85 delta with less time, or maybe a 35 to 40 delta expiration, somewhere in that line. Now, if you're able to stay in front of your computer screen, for example, and we say, oh, based on the 60-minute chart, when the price was way up here, we didn't say chase the market there. Look for a regression to the mean of the moving average, and that's why we had the pullback pegged at 42.77. Now, if you were trading on an intraday basis, and you'd say, well, on a 15-minute chart, I didn't get a buy signal. Here's what's really unique about the high close doji setup. It's kind of like you get these patterns on an intraday basis. The utility sector, the ETF on the higher degree time frame, the shorter degree time frame, pulled back to person's pivot, the pivot point support. It pulled back and then formed an intraday, this is a 15-minute chart, of a high close doji. Now, our entry was low risk. We were looking to buy 42.77 and said, man, if this thing takes out 42.44, it's no good. It's negated the trade. it stopped dead on a dime where it should have. Ironically, if you bought just against the 60-minute moving average pullback, you did get filled at 42.77 or got an option on at that price level. Had you waited an extra hour and a half and got a short-term buy signal that went with the direction of the higher degree time frame, in other words, the 60-minute chart is in a buy signal. There's the PPS green arrow. 60 minutes is in a buy signal. You're just buying a pullback. You're buying a 15-minute short-term buy signal that goes with the dominant trend of the market. In this case, the dominant trend was the 60-minute chart. But you had a high close W. The funny thing is, this entry that we looked at to buy back on the 60-minute was 42.77. And the high close doji entry would have been 42.72. So either one or the other, you had a defined risk. And if you waited and you were capable of watching the market, seeing that high close doji, just from the point of entry to even this afternoon's average trade of the highs, it was over a 2% move on a silly little XLU trade. How do we set this up? Again, looking at certain technical patterns. So are we looking to do a vertical spread if we're looking for an immediate move? Heck no. Why? Because you and I know, if you've traded options before, how many times has the market gone up? You're in a vertical spread. You're like, hey, I'm up. The market's moved. And your spread's up. Oh, wow, I'm making 8 cents on my spread. Whoopie-doo. It's hard to spend that whole 8 cents and even get out between the bid and ask sometimes to even see a sizable profit on a spread. So to me, vertical spreads are only useful under certain market conditions and when I'm looking for a move that might, as I want to test the waters a little bit, that I can actually scale out of the trade, and or some people refer to it as adjusting the trade. Now, one great example of that in doing a vertical or what we would call a debit spread, I generally do not like to do a one strike by one strike. I like to do a little bit deeper between 2 and 3 strikes, depending on if it's a 1 point increment or $2.50 increment on an individual stock. One sub strategy that we've done is in the Russell. In our trading room, we went with just a very small like position, and we're scaling in. So it's not like we're adding to a loser. We are in a losing trade. It is losing money, to be truthful and to be forthright. But this was the strategy. It was a strategy to lightly test the waters to get in over time, because from a seasonal perspective, the Russell actually tends to peak out towards, from a seasonal perspective, the end of June. Now that's kind of interesting because we were looking at this market being the strongest of all the stock segments compared against the S&Ps, the diamonds, and it's a very small position. Our current position is actually the 124 and the 119. What we're intending on doing is, if the market, we'll see if we get a little bit further of a move over the next couple days. That means Friday, Monday, and into maybe Tuesday morning. And we'll most likely buy back the short side of the 119 and roll up into the 122 and tighten up that spread. If the market actually does give us a little sell signal that's when we'll add to the position. So we have several choices in which to take advantage, and considering the fact these were August expirations. So the key is we have chosen the right duration of time, and the expiration is August 21st. Now, there are specific rules that I like to utilize in doing options. And many of you have been taking different options classes, I'm sure. Many people have told me that they've struggled with the fact that they really aren't versed in directional trading strategies enough, because they've gone through the schools or the trading methodologies that people are taught to sell premium and not buy premium. there is no, and I'm sure you're going to discover this if you haven't already, there still to this day isn't any other. So I just want to make sure we still have sound. So we still, if we have sound, one of the nice things is that if you're doing a presentation, they have sound. I just wanted to make sure that a lot of people have this understanding that buying premiums is a sucker play, and I don't think that's the case at all. There's no other investment vehicle on the planet that can give you a better rate of return than a deep out of the money option. The problem is, yes, deep out of the money options, dollar for dollar, they have the most powerful defined risk leverage reward outlay of any investment derivative product. The problem is that deep out of the money options, especially even in the Russell, which has had mild trends, choppy market movements, one day down, 3-4 days up, then you can see the little swings back and forth, then down, then back up, down, up, down, up. This has been kind of a choppy and sloppy market, not really a smooth, defined trend. And this goes back since the beginning of 2015. This is a daily chart. The interesting aspect of that is that if you are doing a longer-term trend trading program, then this has not been a very good year because it has been very choppy and it stays down for considerably a period of time. A lot of people are using what? Weekly options. So, if it sounds too good to be true, then it probably is, because there is no easy solution in the markets. You have to do your homework. You have to do your research, and you got to be properly educated. I believe that 100%. And it takes experience. And one of the things that we see in this market is that we're all trading right now on an equal level playing field. Not a single soul that I know have traded in an environment where we've had 28 foreign central banks implement some sort of what? Quantitative easing, right? We've had this year alone over 28 foreign central banks implement different forms of quantitative easing. I think it was 4 weeks ago on the Bank of Australia was the last of them to do something. And now we have the Federal Reserve here in the U.S., kind of playing with, toying with the ideas the market's anticipating an eventual rate hike. So at this point in time, there have been very good reasons for people to be skittish, and that's what the market's been doing. It's been acting skittish. But over time, I look at an option trade and I say to myself, guys, I'm not asking the market to go all the way back down to where we started the year. I'm only asking the market if it sees any further upside in the near term to maybe trade back within this little mild trend. I'm not looking for the market to move down. So when I utilize an option strategy, I always keep my strikes within what I consider the realm of reality. In order to figure out where a market will go, then you just look at the chart and say, well, where's it been? And is it capable of getting down there again? Now, if the market could only rally so much in a seasonally strong period of time, what the heck will it do when it enters its seasonal weak period of time? And if we start to see the market show signs of that turn as we end the second quarter, then I am more positive that we will see that little correction in the market that so many analysts have been calling for the last few years. Now, that's just my take on the Russell and one way that I like to trade the market. There are certain times that when I'm directional and I have a high probability setup, and if you're not familiar with my setups, I would like to introduce you to a special offer tonight, one that we put together that we've expanded on. If you are interested, and I'll get back to for some of those that have to leave, this is our brand new option strategy simplified. It's for directional trading. If you're interested, I will copy, paste. You should definitely, if you've ever taken some of my educational information before, I would tell you right now, you deserve to get this course right now and study this information, because these are effective strategies that are working in today's markets right now. So I just posted that for you, and I'll introduce you to that, which I think is a very powerful trading application. Now, another technique that I often teach people is with the increase in exchange traded funds. And I want to make sure that we still have sound. If we are looking at with exchange traded funds, what happened? We increased more exchange traded funds. We increased all types of exchange traded funds, leverage and inverse ETFs. And sometimes we find that people, if they're looking to put on a hedge, they can't. Some people can't trade options in a retirement account or whatever restrictions people have. So therefore, sometimes take advantage of looking at the markets. And this is something that George Lane, who was my boss and mentor, if you're not familiar with his name, George is the man that's credited for popularizing, creating the indicator known as stochastics. I worked for Uncle George back in 1980 and 82, so I had the privilege of working with a true mastermind, so to speak, in the technical analysis field. And one thing that he said, sometimes people have a hard time identifying when a market's topping out. He says, real simply, print out a chart. Back in those days, it was that thermal type paper. And you would print out a chart, he said, and hold it backwards, upside down. And sometimes you might see something different. And that always resonated with me. And nowadays, we have the advantage of doing that via inverse ETF. So I thought it would be interesting on that note to share with you an interesting scenario. This is the IWM. It's the Russell ETF. And I want you to see we've got the pivot points up here. I'm going to go to a real-time chart here, and I'm going to go and just punch this up and go IWM, all right, monthly person's pivots. Now, funny thing is, we've surpassed the monthly pivots. The monthly pivot analysis, we just blew through that with today's price action. And we'll find out tomorrow if this was if it does what we call an equal and an opposite, and it comes right back, or if there's maybe another inside trading day or maybe another day or two of potential upside. We'll find that answer out tomorrow. But what I wanted to share with you, what I think is interesting, based on that concept that George taught me some 35 years ago, let's take a look at the TZA. And I want you to show that we're using, and again, I'll just put it up on a real-time chart. So let's go TZA. Now, what is TZA? It's the inverse leveraged ETF on the small cap or the Russell 2000. Now, when the Russell goes down, this will go up. Note something very, very interesting. I just pointed out to you that the IWM, which is the exchange traded fund on the Russell, I said that the price of the Russell surpassed the resistance. Well, listen carefully. If the Russell ETF surpassed its resistance, then theoretically the inverse ETF should have surpassed its support. Ironically, it did not. You can also clearly see with the short-term longevity of the TZA, you can see the seasonal trend that exists in the TZA is a time that we see bottoms on or about the 19th. I think that's just a coincidence. I look at the overall trend, and I look at the condition of the market. The funny thing is we have a volume indicator that is suggesting that this decline is not on heavier volume. So we have what we would say is a potential bullish convergence setting up. And it's kind of a different picture in the sense that price has not broken support. So we want to keep our eyes peeled on this. And one of the techniques we would be utilizing is we would take this from a daily chart into a 60-minute chart over the next couple days. and we will be looking for potential buy signals and confirmation of maybe the market showing signs of a bottom in TZA that might give us a better clue as to maybe the Russell itself posting a top. Now, I just went back using the same settings with the monthly pivots, and you can clearly see where the Russell, the IWM, broke its monthly person's pivots, whereas the inverse ETF has not broken its monthly support. So kind of an interesting analysis there that if I should have theoretically broken resistance, I should have broken the support in TZA. That has my curiosity, especially since we are seeing the breakdown on TZA on lighter volume, sharing with me that perhaps this particular move in the market might be short-lived. So I have to be more increased awareness on that. When I get confirmation and I see a market might move, then I'll make the decision on what option strategy to employ, especially based on several factors using option analytics. Of course, implied volatility, liquidity, if there's volume, open interest, and those are the kind of checkpoints that we go through to determine a strategy. Now, tonight, I also thought because it's nearing the end of the quarter, this would be a nice time to go through as a quick review. I had mentioned the fact that the VIX, the volatility index on the NASDAQ, I also wanted to take a look at the seasonality of that, actually look at seasonality enough on some of the products that we have to measure the actual fear and greed, such as the VIX. And we have so many new products now on the VIX, it's insane. It's become a trading empire on its own. So what I'd like to point out to you, kind of an interesting concept here, is that we generally see a little spike in the VIX, a bottom from a seasonality perspective that comes in May, and then we kind of knock around. But go back to the left of your screen, and you will note here that towards the end of June, that's when we make a real significant secondary seasonal low in the market, and from the VIX perspective, and we definitely see from July 4th weekend going into the first week of October a seasonal upturn in the VIXN, VXN. So the NASDAQ kind of ends its strong seasonal time period right now. I don't know if anyone noticed today the lack of follow through with a big name company called Apple, but I found that to be kind of unusual to see a big equity market move and not a lot of follow through in a very popular stock such as Apple, which is what? Tied in with the technology and, of course, the NASDAQ. In addition, I just thought I'd throw in the VIX, since it's been around a little while. It's nothing new to veteran traders, but this time I threw my person's quarterly pivots. One of the things that I wanted to share with you is how good are the person's pivots? Do they, more times than not, identify support and resistance on a quarterly basis? And more times than not, do they help identify what the range might be contained? You know, here's a time period in a quarter where it says it's going to be contained in that range. Here's a quarterly pivot that says the VIX will be contained in the range. Now, there are times where we've been work, but it, for the most part, keeps the market contained almost within exactly the predicted range for that time period. I mean, every once in a while we get an anomaly of a lower predicted low, which just does not happen. But for the most part, we stay, apart from maybe one spike, we stay for the majority of the quarter contained. In fact, if the green, if I could delete all this just to share with you, part of the person's pivot study, what's powerful about it is that at the end of the quarter, it tells me that the next quarter going forward projects a higher green and a higher red. That means that it's predicting a higher rate of volatility for the next quarter. Then, you can see that more times than not, I'm not going back through history. I'm just going back through recent history from 2013. The quarterly pivot's done a pretty change for the quarter, as I've just illustrated. It's also done a really kind of a nifty job in that if you look at the time period like in 2014 or the time period in 2013 where we did see a spike in the volatility and we did see the volatility move up from the lows that it suggests. I see a market that's been kind of in tune with its seasonality. I should prepare for perhaps it will continue to stay in sync with its seasonality. And as you can see, in July, we start to base and bottom out. I'm not sure about you, but it's June 18th. That's not that many trading days from now, and we're coming close to the end of the quarter. Now, Person's Pivots is saying that we might come back to 9. I don't think it's going to come back to 9 because it hasn't been at 9. So the fact is it hasn't been at 9. I don't really think we're going to see that. I think this is going to be a low that has not worked. The lows don't seem to work as well recently. But between the range of the high and the low, the range of the high and the pivot level, which is the blue line, seems to be more trustworthy, and the overall range of the market, you can see the average of the range is about like this. What I am interested in pointing out to you that it's this seasonal event in July that from a testifiable bit of evidence by using the seasonal tool. And by the way, this seasonal tool gives us the life history of the movement in the VIX. So the first day the VIX was created, this is a seasonal trend tool for the life of the history of the product that we're looking at. So I just wanted to share with you a couple things that I like to see. Has the market been in tune in recent history with its seasonal trend? Put my eggs in one basket and say, guaranteed this is going to work. I am not going to do that. But what I am going to do, is I am paying attention to the fact that if the VIX is going to spike up, it generally comes at the expense of a stock market that peaks out. And the stock market is in a current rally mode. So with that said, I think that this is something that we need to really pay close attention to in our trading and then study up on it. We do start to see evidence of a market that's rounding out, start to drill down what stocks might be more susceptible for a deeper correction or what stock indexes might be susceptible for a deeper correction. So if we put the two together, we might come to the conclusion that perhaps the small cap sector could be susceptible for, it has the most to give back up. And it could see from a percentage, if it only moved 5%, that might be a nice little rate of return, but it's certainly not a big price move per se versus the S&P. So I would have to tell you that utilizing certain technical tools and applying the right option strategy is a good combination, which is something that we really want you guys to learn. Now, this is a live DVD trading course that includes trading and exact orders that were placed with real money using the Thinkorswim platform. We go through in this trading course A to Z, step 1, step 2. Here's the analytical process. Here's how we come to this, and here's how we come to enacting the trade itself. From looking at outright calls, looking at the correct deltas, to outright put plays, looking at, of course, vertical spreads, as well as one of my favorite strategies when I'm strong directional and I'm looking for a move to happen within 30 days is the ratio back spread. So this is a wonderful course to go through and prepare for a potential summer, what I think might be an explosive summer move. Just keep in mind, we saw some real increased volatility in several summers. If you recall, if you go back in history and look at 2007 and go through history, you can see that August and July have been quite big moves, believe it or not. So I think everyone owes it to themselves to really get some insights in what I'm trying to teach you guys, and it's just an exceptional value. You should jump on this opportunity right away. So I want you also, if you have further questions, you can come visit our website here at personsplanet.com. Many of you know how to find us. You can also, if you'd like, I clicked in that link right there, personsplanet.com, options trading. Once again, this is a live recording. It's not just me sitting in front of a PowerPoint. You actually, me sitting in front of the camera, you get to see my trading account. I'm putting on the strategies, running through the analytic process. This is a course, it's almost like sitting next to me, looking over my shoulder and watching me place orders and understanding what strike prices did he choose and why, and what is the order entry method. And you'll see how I work the bids and the asks, and you'll see how we execute these orders. This is a very dynamic course and something everyone should start to learn, especially if you're getting tired of these non-directional strategies, because, folks, even if it's short term, I mean, a day or two, we do get opportunities in this market for these 2%, 3%, 5% move. And then, one of the most busiest seasons in options stock equity trading is coming upon us, and it's called earnings season. So rest up. It's going to be quite an exciting summer. I hope you found tonight's presentation very valuable, because it's something that we have been implementing in our own trading room week in and week out, and it has been busy. So I will be honest with you. Awesome stuff. So with that said, you guys have a great evening. If you have questions on the trading course, certainly send us an email or give our office a call. We have several people here that can help you out. We've got Cameron, we've got Sonia, my wife Mary. So if you have further questions on what this course contains and how it can help you, certainly feel free to give us a call, and we can help you get to what you really need is great information to help you succeed and take advantage of these moves. So with that said, I want everyone to have a great rest of the summer if we don't cross paths again, and good luck over the summer, and hopefully we'll see you at the next event. And or if you're interested in taking seminars at sea, we've got our second annual cruise at seas that you can find out information about on our website. Everyone, be good. Have a great evening. Thank you all very much. Yes, I just posted that link right there. It is personsplanet.com/options-trading.html. That's where you can snatch up this trading course. I would absolutely watch this thing. It's exciting. It's great. It gives you the live charts in front of you, the live trading quotes. You see those orders entered. Great stuff. So, very nice stuff there, guys.